going on, guys? Welcome to my new YouTube channel. Please leave a like on this video and subscribe to help my page grow. So today I'll be talking about Tesla and whether it's a good time to invest in the stock. As we know, earnings are coming up in a few days, and a lot of investors are sitting on their toes waiting about it. See that Tesla had a huge run up this year. So right now we're looking at this huge run up followed by this huge pullback, and another run up, then another pullback, and same thing happened again. And right now we can see the price over the last few days consolidating around this 440 450 range. So what I'm looking to see over the next few days is whether or not if earnings exceeds expectations, I have a feeling the stock will fly past 500 range and will create some sort of support there. So you want to keep a lookout for that, and if it doesn't, I expect the stock to fall to 370 range. I don't see Tesla falling below that because of the value that the company brings and long-term growth that comes along with it. Personally, I'm very comfortable investing in Tesla because of ARK Invest. So I'll talk about what ARK Invest is right now. ARK Invest is a ETF that invests only in disruptive technologies. So what we'll be looking at is arkq, which is the disruptive technology ETF. And as you can see, compared to the S&P 500, which is the top 500 stocks in the market, you can tell that ARK Invest is beating them in every single time frame. Looking up from the 5-year price performance, ARK Invest had a 418% return, while the S&P 500 has 70.8% return. Here you can see the huge run up that this ETF has had. Since innovations thrive on crisis, this is what happens. And Tesla led the majority of this run. So looking at ARK's holdings, we can see that 10% of their holdings are in Tesla with a whopping $1.08 billion and 2.46 million shares held. 10% of holdings in this ETF, and all they do is focus on disruptive technology. So I'm fairly comfortable holding Tesla on my long-term buy and hold, knowing that this ETF holds it in theirs. Another reason I can surely say that Tesla will grow is based on just common sense and lithium-ion batteries. So just looking up lithium-ion battery costs, you can see that in 2010, the cost of lithium-ion batteries per kilowatt hour is $1,183. Today, or in 2019, it's $156. What does this mean for us investors? It means that Tesla can become much more profitable by reducing the price of a car while increasing gross margin. So this is amazing news for Tesla, and I really see them reducing the price of their cars by significantly less. I expect this price to drop to about $30,000. I really think that's achievable, and I hope you see why. So looking at the chart, would it be a good time to invest or not? That's up to you. I won't force you, but I think you should play it as a long-term play rather than a short-term play, knowing what growth this company can provide. So that's it for today's video, guys. Hope you enjoyed, and if you learned something, please leave a like and please subscribe to the channel.